What's going on, everyone? So today I'm gonna be coming at y'all with another stock that I am looking at. Now, the stock I'm looking at today is a pharmaceutical company.
With a rich history dating back to the 19th century, Eli Lilly has faced struggles and successes. But a booming market cap has quickly turned it into the biggest pharmaceutical brand in the world.
I don't have a pharmaceutical company in my portfolio, and I'm trying to find one to add just because I'm trying to diversify. Now, I know what's going on with the government right now and what Trump is saying.
Shares in Asian drug makers are lower this morning after President Trump said he planned to slash US prescription drug costs. In a social media post, Trump said that he will sign an executive order today mandating that Americans pay no more than people in countries that have the lowest price. Let's get more now with...
But when everyone's running away, I figure it's a good time to buy because the stock price will drop. So with that, what are my requirements for my stock that I want to purchase? So the stock I want to purchase, it needs to pay a dividend because this is going into my dividend portfolio. Number two, it has to be financially stable. It can't be in a negative equity. It has to be good standing and making money. Number three, it has to have good growth opportunity. There's no point of me having this. I'm pretty far from actual real retirement, and this is just going into my dividend portfolio to maybe fund my bridge account or whatever. It's just gonna go into my dividend portfolio just because I'm done with my retirement portfolio. Now, the company I'm gonna go into today, it's pretty simple. It's called Lilly, or Lilly Pharmaceutical, and here's some more detail about it.
There may soon be a new medical option for losing weight.
Eli Lilly's experimental pill appears to work as well as the injected drug Ozempic to lower weight of diabetes patients. Our Dr. John LaPook has more about it.
Now, this is the company. What do they do and what do they make? Well, they make all types of different drugs for Alzheimer's, pain, cancer, immunology, diabetes, and obesity. And I don't see those diseases going away anytime soon. So with that, I still think people are going to purchase it, and it's still going to be need in the market. So with that being said, that's who they are. And yeah, I can go more detail what they're doing, the research they're doing, but at the end of the day, if they're not making money, what's the point of keep going on to this research? Now, comment down below, what do you think about this company? Should I invest in it? Shouldn't I? Or am I just wasting my time looking at this? And give me a thumbs up. It really helps with the algorithm. So these are the disease area they're studying. They have a bunch of money and they're investing into the industry. Now, look into this company real quick. So let's look at what they've been doing in last year. And over the last year, it's down 3.3%, or $25. The 1 year is down 4.68%, or $36. The 3 years is up 149%. The 5 years is up 393%. Now, I'm looking at these numbers, and if I'm expecting long term, I expect a pretty good return on this. Now, before we can say how it's going to do in the future, we're going to have to look at the numbers of finance and if they have growth opportunity. So let's do a quick look. So from 2017 to 2024, they've been growing pretty steadily. In 2023 to 2024, they had a phenomenal growth of $11 billion. That's phenomenal. It grew a lot. And before we get into the detail, let's look at the gross margin. Gross margin is 81% with a net profit of 23.51%. That looks phenomenal. They're doing good in the book wise. But let's go in a little more detail and look at the income statements and see what they're really doing. 81%, profit margin of 22.66%, You know what? That is a pretty good profit margin. Now, let's look at the balance sheet. So they grew their cash growth by 21.46%. That's pretty good. They're not going into negative besides in 2020 or 2022. The current assets 41, total assets 89. Let's look at their total liability, 73 for the total liability. So they're worth more than they're liable for. So that's a good sign. All right. Look at the cash flow, net income, depreciation amount, loss and gains of sales. Let's see. Investing cash flow. They've been spending a lot of money. Let's see. Total debt issue is 11,426. So they did increase their total debt. Might not be a bad thing. They are building a bunch of facilities, so it makes sense why they're spending a lot of money. So you have to know why they're spending money. So looking at the cash flow, I don't see any major red flags. They look like they're good financial standing. Now, market growth, they grew 5.84% over the current right now. And every year it looks like it grew pretty good in the market cap growth. So it's growing pretty well. And this is where you need to understand that whenever a company is growing, you'll see a good return. Now, it doesn't matter what the stock does for me in hindsight. I just need to find a company that's making money and is good growth. Because eventually the stock will catch up or the stock price will adjust. But the big part is if they're making money, they're growing the company, that means that eventually the stock will grow. Even though a lot of people, it doesn't correlate 100%, it is supposed to go up whenever the company does better. It's supposed to. It doesn't always work like that. PE ratio is 60.79. Kind of high, but they're going down with the PE ratio. Right now, 165. So you know what? That makes sense. All right. Let's look at debt to quality ratio, 2.44. That's not too bad. And so it looks pretty good. Let's look at what the forecast says. So it says the target price is 1,014. Right now it's 747. You know what? It kind of makes sense. I kind of expect if it just does average, you get a pretty good return. But this is by May 2026. That's quite a bit away, you know, so you have to look at it like that. So it is a strong buy, according to analysts, and I want to see if it does well. So financially, it looks good. So if financially looks good, it looks like it's growing. We need to see the dividend now. So the dividend payout, it's been growing 15.23% with a 10-year growth. That's not bad. They have a 10-year growth history. They're slowly paying more and more. So it looks like I can get a pretty good return on dividend. Now, they do have a lower dividend percentage of 0.80, but it's about the growth and it's adding to my dividend portfolio and for long-term growth. So, yes, I think it's worth having into my portfolio, even though it has a low dividend yield. So let's go back to MSN. I like this website better. And let's look at the investors. Who's investing in it? BlackRock is the top shareholder. I like that. State Street, another good investment company. So you do have some very big people that's investing into this. So good sign for me. Top seller, JP Morgan Chase. Okay, so JP Morgan Chase is the top seller. And the company looking for insider trading. So Hatkin, he's the VP or General Counsel Secretary. He sold 18K, but it looks like everyone generally keeps their shares. One person sells, but everyone looks like they keep it for it. So it looks like it has a great growth opportunity. But let's look into what the AI says to look at the number. So the AI says the valuation is 2 out of 6, which it's a little bit overpriced right now, but almost all stocks are overpriced, so I'm not really worried about. Earning is 4 out of 6. I agree, it has really good earnings, not the best, but it's really good. Future growth is 6 out of 6. I agree, because they have a lot of projects. They're investing, and this is the article I found this morning that I thought it would be interesting. And they're bringing jobs to Houston. So they're making a manufacturer and gonna hire over 2,000 people. And they have an eye out in Houston. You know what? If they're growing this big and they're coming into the Houston area, I want to invest in them because it's a company that I can believe in for the future. So they have some good news. They're growing the company, which that means they have to invest a lot of money. So their cash flow might be a little difficult, but they're growing the company. They have a lot of good news. Historical performance 4 out of 6. I agree. Right now it's not doing too hot. It's not growing as well, but and financial health is 5 out of 6. I agree. Financially, this company's pretty sound. Now, let's look at how it compares to other people. So LLY compared to J&J, PFE, and MRK, it beats them. It beats the industrial average and the peer average. So it's above average for them. So, and MSM is actually saying, according to analysts, it's a strong buy or a buy. So with all that information, what do I think about them? And this is the thing. Me looking at this data, it looks like I will be buying this stock. Now, how much am I going to be buying? Probably not a lot, maybe $500, maybe $1,000 worth, just to add to my portfolio. My dividend portfolio is not that big, but I'll probably be adding this to my portfolio and watching it grow in the next few years. Yes, the dividend is not the greatest, but it does meet all three of my criteria. Now, what were my criteria? Number one, does it pay dividend? Yes, it paid a dividend of a 0.8%. That's not a lot, but it is in the early phases, and it on dividend growth, so I might get some good dividend growth over since it's consistently increased in the last 10 years. So it might be the next future, like Coca-Cola or something like that. So I might get a really good dividend growth percentage. Now, number two, does this company have financial stability? And yes, it has a pretty good financial stability no matter what's going on in the market and what's going on. So it does meet my second criteria. Number three, is the company a good growth opportunity? Yes, it has a good growth opportunity, especially with more and more people needing medicine and drugs for diabetes, obesity, and other treatment. It's going to be needed. So with all that and all the great news that I see that's coming out, I see that it's going to have a good growth opportunity in the next few years. Now, make sure you do your own due diligence and understand what you're investing in, because I'm just some guy on YouTube and I'm just looking at these numbers and doing my basic investing strategy. This is my investment strategy. If you like it, hey, like, subscribe to my video, and stay tuned for other videos. But I will be investing in this and I probably won't sell it for the next 5 or 10 years. Even if I sell it, it looks like a good, strong company to have in my portfolio for the long term. Like, subscribe to my video, and that's all I got for you.